Yeah, hello everyone. A very good morning to one and all. So, after a very long time, I'll be making a video. The topic I have chosen today is the stress test that is SEBI has instructed the small and mid cap mutual funds to conduct. Basically, what is a stress test? Actually, SEBI has instructed the mid cap and small cap stocks to conduct a test so that in case there will be a redemption pressure on the small and mid cap mutual funds, whenever there will be a situation of crisis or redemption pressure, how long it will take for the investors to redeem their money into their account. So I'll be sharing basically some of the statistics and data with graphs so that it will be very easy for you to understand. Yeah, so let us go to the first slide. So these are some of the mid and small cap funds which has been ranked as per their liquidity. So first one is mid cap funds. As you can see, I have pointed on the screen. Among the mid cap funds, Katak Emerging Fund has taken 17 days for 25% portfolio redemption. Similarly, SBI Magnum Mid Cap Fund has taken 12 days for 25% portfolio redemption. So, if you can see, there is a correlation between the asset under management and the number of redemption days. See, larger the fund size, greater is the number of days required to redeem the fund. However, in case of HDFC Midcap Fund, though it is the biggest fund, the number of days required for redemption is lower compared to Kotak Emerging Equity Fund. Uh, Basically, we can draw a clear conclusion only by observing the AUM size and the number of days required for redemption. And similarly, for small cap funds, you can see greater the size of the fund, greater is the number of days required for redemption. In this graph, we are showing 25% redemption and 50% of the portfolio redemption. So this is the number of days and this is the AUM size. Okay, so here it is written that funds with larger assets under management are estimated to take longer to liquidate their holding. Similarly, let us go to the second slide. Yeah. So here it is shown that among the mid-cap funds, LIC, Taros, ITI, you can see that 25% redemption is taking only 0.05 days. That is a very small fraction of a days. What does this slide suggest? This slide suggests is that among the small sized funds, that is in the mid cap category, those funds which are managing small AUM. See, only 243 crore AUM is being managed by LIC mutual fund mid cap. So here 25% portfolio redemption is taking only 0.05 days. Similarly, 50% portfolio redemption is taking only 0.09 days. And as the AUM size is increasing for these respective funds, their portfolio redemption days are also increasing. So it is quite clear that larger the fund size among the small and mid cap categories, larger is the number of days required for redemption, and smaller the fund size in the respective categories, smaller is the number of days required to liquidate. So, what will be your main issue during redemption? Whenever there will be redemption pressure, you want your money as quickly as possible into your bank, right? So that it does not go through the volatility cycle. Among the small cap funds, also like that, smaller the asset under management, lesser is the number of days required for redemption. Let us go to the third slide. It is showing that concentrated investor base is risky. What does it mean that? Suppose in Motilal Oswal Mid Cap Fund, in this fund, top 10 investors are holding 23% of the asset under management. Now, if there will be a redemption, what will happen? If all the 10 investors and come and they press the redemption button, there will be huge redemption pressure. So that's why we need to see that how much concentration is there in the mutual fund. That means if lesser number of investors are holding larger number of AUM into their portfolio, then it is a quite risky fund, because in times of redemption, these people can create a large redemption pressure, due to which there will be liquidity crisis in the fund. For the similar, for the small cap funds also similar thing can be said. 22% is concentrated to top 10 investors. Now, see, among the small cap and mid cap funds, if we see right now, since they are giving 43%, 53% CAGR for the last 1 year and 2 years, so this is not a realistic return. In the long term, it will come down to 18%, 20%, even if they are very good performing, because market will go through volatility, market will go through cycles. Even the greatest investor of all time, Warren Buffett, has over the years gained a CAGR return of 18% only. So if you can see, among the mid cap funds, Bandhan mid cap funds price to earning ratio is 56.2, while the benchmark PE in this category is 28.9. That is, it's quite costly. That is, these funds are overvalued, quite overvalued, with respect to their respective benchmark. Why they are overvalued? As you can see, their price is continuously rising, NAV is rising, so currently they are overvalued. Similarly, in the small cap fund category also, you can see Canara Robeco small cap. It is quite overvalued, 47.9 PE in comparison to the benchmark PE. Okay, so this slide is regarding the valuation. Now we can see that in the second slide, I have said that larger the AUM managed by the fund, so higher is the number of days required for redemption. That is, in case there will be liquidity crisis during the time of redemption, larger funds will take more days. But that is not quite true. That means we can't draw a conclusion, because in the larger fund, I mean whichever small cap and mid cap funds are managing higher AUMs, uh, because only 65%, as per SEBI regulations, 60%, 65% they need to invest in mid cap and in small cap, if it is a mid cap and it is a small cap respectively. So if it is a large AUM based mid cap fund, suppose a Motilal Oswal mid cap fund, they're holding 32.6% of their portfolio in large cap and cash segment. Cash means it is in the liquid form the fund house keeps. Uh, Provided there will be a if there's a redemption pressure, they can provide it to their respective portfolio holders. So we can see that in Axis Midcap C, it is a fund having large AUM, 25,248 crore AUM it is managing, and in the cash and large cap, it is it is having 26.9% holding, and days to liquidate 25% portfolio is 6 only. Earlier we have seen 30 days, 32 days. Even though it is a mid cap fund, it is a large cap fund. Since it is holding with a large cap and cash segment, a significant portion of its portfolio, hence it is taking only 6 days. Similarly, in the small cap category, we can see Quant Small Cap. It is the largest. It is the second largest among the small cap funds. It is taking 11 days, as it is holding 33.9% in large and cash category. So now, what are the key takeaways we can take? Huh? The key takeaway firstly is that drying up of liquidity is more common in bond markets than in equity market. So in 2020, when severe liquidity crunch forced the winding up of Franklin Temptation mutual funds that scheme. So equity funds have so far never faced any crisis of this magnitude. So whatever we have been discussing, that 25% redemption, 50% redemption, it will take 30 days, 12 days, whatever it may be. This is a hypothetical situation only. It has not occurred till now in Indian equity market, because 25% redemption pressure, 50% redemption pressure is a quite large pressure. But I will suggest investors to keep yourself away from mid cap and small cap category funds which are having very small amount of holding in the large cap segment, because in case god forbid, in an unfortunate situation, if there's redemption pressure, you should not go through headache. So see, equity fund primarily attract retail participants. So mutual fund, only retail investors invest in mutual funds basically. So it is holding 56% of equity fund in AUM. That means retail investors are holding 56% of the portfolio managed by mutual funds. So all the retail investors will not come for redemption whenever there will be redemption pressure, because they will refrain from immediately redeeming from equity funds due to their aversion to booking losses. Right. So these are the key takeaways. So we can also, the outcome of the stimulated stress test cannot be the sole reason to buy or exit a fund. It is akin to buying or selling an actual car after playing it in a virtual video game. So it is basically like a simulation game. It is not the actual scenario. In the actual scenario, whenever there will be a redemption, it may not happen or it may happen. So these are the things I wanted to share with you. Thank you. So if you want to contact me for any advisory regarding your portfolio management and consultation, you can consult me at the above at the email ID and contact number provided on the screen. Thank you. Thanks a lot.